Not long ago, getting a loan in India meant, taking half a day off work, filling out a mountain of physical paperwork, and just praying for an approval.
Yeah, and today, you can literally borrow money in minutes directly from your smartphone.
Exactly. Welcome to today's deep dive into a recent FinShots article from August 18, 2026. Our mission is to decode why Bank of America is investing a staggering 18,300 crore rupees into India's geocredit.
Right, and how this deal really reveals the future of global finance.
Okay, let's unpack this. Because we're looking at a profound transformation driven by something, much deeper than just better app design.
Absolutely. To really grasp the scale of this investment, we have to look at the demographic shift happening in India right now. I mean, the World Bank estimates that the share of the population living below the lower middle income poverty line dropped from 58% in 2011 down to just 24% in 2022.
Wait, from 58 down to 24? That is a massive drop.
It really is. That means hundreds of millions of people are moving up the income ladder and, entering the formal financial system for the very first time.
Right, it's like a financial coming of age.
Yeah.
When you're just scraping by, you're focused on basic survival.
Yeah, exactly. Just the essentials.
But as wealth rises, your needs change completely. Suddenly you want a two-wheeler to get to work, then maybe a credit card, and eventually you're looking to invest in mutual funds. So what does this all mean?
Well, it means an unprecedented surge in new borrowing.
Right.
Indian household borrowing actually jumped to 6.4% of GDP in the 2024 financial year.
Wow, 6.4%. And Jio is perfectly positioned to capture this because, they aren't starting from scratch. Their telecom network already has 500 million subscribers.
Right. What's fascinating here is how Jio is leveraging that audience to build an entire financial life cycle trap. And they are doing it in a highly strategic way.
Oh, definitely.
They formed a 50-50 joint venture with BlackRock for asset and wealth management and partnered with Allianz for insurance. Because they control the telecom data, they know exactly when a user pays bills and, what they buy.
Which is a huge advantage. They can use that exact behavioral data to automatically approve a young borrower for a small loan on Jio Payments Bank today.
Yeah, and years later, seamlessly pivot them into Allianz Insurance or BlackRock mutual funds.
But lending to 500 million potential borrowers is like trying to fill millions of water glasses all at once. You need a vast reservoir.
For sure. And enter Bank of America. They could eventually take up to a 49.9% stake in Jio Credit.
While Jio retains ultimate control of the wider ecosystem, right?
Exactly. Bank of America essentially provides the capital and the underwriting discipline.
Right.
And that underwriting discipline is crucial. It means Bank of America actually knows how to mathematically analyze a borrower's history.
Right, to ensure they can pay the money back, rather than just handing out cash to anyone with a smartphone.
Exactly. They act as the traditional risk management buffer.
But here's where it gets really interesting. I have to push back a little on this frictionless utopia.
Oh, okay.
Yeah, I mean, if we remove all the hurdles to getting a loan and borrowing becomes just a single tap on a screen, aren't we inviting a consumer debt crisis?
That is a very valid concern. If we connect this to the bigger picture, the history of finance shows us that prioritizing aggressive growth over strict underwriting inevitably creates a very expensive mountain of bad loans.
Yeah, we've seen that happen before.
Right. That is why Bank of America's traditional risk metrics are so necessary. But Jio has an asset Bank of America doesn't, which is alternative data.
Oh, right. And that introduces a completely different kind of risk. Jio sits on vast records of how millions of people communicate, what they consume, and how they transact.
Exactly.
Yeah.
Using that alternative data might make loans cheaper, but it gives them an almost unbeatable advantage over competitors.
It feels like a very thin line between responsible lending and, invasive data profiling.
Yeah, that is the exact tension regulators are terrified of. I mean, it's the difference between using your data to give you a fair, personalized interest rate and using it to exploit your spending habits.
If you are wondering how this affects your own wallet, consider this. This deal is the blueprint for how everyday people will interact with money for the next decade.
Yeah, it really sets the stage.
Right now, only 9.5% of Indian households invest in the securities market. In the U.S., that number is 58%.
Wow, that is a huge gap.
The runway for growth in India is incredibly vast, and the entire global financial sector wants a piece of it.
Absolutely. It serves as the gateway to a modern financial economy for hundreds of millions of people. But it certainly comes with complex trade-offs.
It does. Let's leave you with this final thought. We started by marveling at the sheer convenience of getting a loan with a single tap on a phone.
Which is amazing, but also a little scary.
Right. But if a single tech ecosystem ultimately controls your communications, your daily payments, your jet, and your life savings, well, at what point does that unparalleled convenience cross the line into total financial surveillance?